Good day and welcome to our weekly market update presented by myself, Vigard Celia and Andre Celia. Andre, this week, unlike the previous week we have a slew of data coming out this week. Bank of Japan, a lot of US labor data coming out. But most pertinent for South Africa is probably our medium-term budget speech, which our Finance Minister, Ino Godongwana, is going to talk about on Wednesday afternoon at 2. What can we expect from our Finance Minister on Wednesday?
Yes, good morning. Firstly, the medium-term budget speech is not a budget. It is a SA medium-term budget review. And it just gives us an evaluation of where we stand. And normally what the outlook is for the rest of the year. So firstly, we want to only see one thing. We want to see that the fiscal consolidation and the enforcement of budgets and the staying within budgets and the containing of expenses is intact. I'm very hopeful and I'm very sure that Mr. Godongwana will tell us exactly that. What we must remember is that we are still in a very weak economic environment, which means that we should not at any chance hope for figures that's going to tell us that the income side is shooting out the lights. That can only shoot out the lights in periods of good growth and companies doing fantastic and paying lots of tax. And that's definitely not the case with our economy at the moment. We do have the advantage of people that could do a little bit better because of load shedding that was contained for so many months, but still definitely not. If I look at mining industries and so forth, they're just not going to shoot out the lights in terms of tax. So at best, we can expect the minister to say that we're on target. If we're on target and with a little bit of extra funds that came in from the two-pot system, that is collecting more than what he expected, and the last part of the year, that money that is being spent in the economy that might aid growth a little bit, at best he will tell us that we don't need to go to the markets to borrow more money and that all our expenses and income is fairly on target. So if that is the case, it might turn out fairly positive for markets, for what we expect, and maybe a slight little bit of positive impact on the rand as well.
So you're talking about positivity at the moment, but if we just go over to the east and we go to Japan, it's not as positive as we probably hoped there. They've got some turmoil in their political front, snap elections that happened overnight, and the current leading party didn't fare so well. Together with that, the yen is back under pressure because they've got interest rate decision this week. And what can we expect from the Bank of Japan this week?
Yes. Firstly, I don't expect them to change anything on the interest rates, but my favorite saying about Japan is, it is an old age home. There is very little consumption by the people. There's no growth there. The older people most probably wants to see a little bit interest rate increases so that they can get some money, some return on their funds. But that economy is a little bit in trouble. And I think people need to see change. They want to see change. That's most probably why on the political side, the ruling party is not getting the majorities that they want. But the yen is under severe pressure. The inflation is going higher. The interest rates remain low. So the markets keeps the yen under pressure because they want to see that change. But I doubt whether they will change interest rates. So the yen will most probably remain under pressure. And if they were to change interest rates and increase it, we could be in for a very, very interesting situation in the markets, because that could have a dramatic impact on the so-called carry trade. And we've seen that at the last change of their interest rates, where that had a very dramatic impact. But I don't think that will happen. I think it will just carry on and the yen will remain under pressure.
Now you're talking about pressure again. So now we will go over to the US economy quickly. Pressure on the labor market. We've got a slew of data coming out. JOLTS, ADP, US non-farm payrolls, unemployment, average hourly earnings all this week due. Is the US economy turning the corner and slowing down, or the US exceptionalism continuing at this stage?
The labor data is really interesting. If you look at these four graphs that you've put up for us here, change in payrolls month on month, then we are seeing a decline. If you see the change in manufacturing payrolls month on month, that's entered into negative territory for the last three figures now. So we seem to be running into a bit of a change there that could be a trend. On the unemployment rate, first of all, 4% is a very low rate of unemployment. But if I quickly glance at the graph, then from December 2021, things went better. And now we must remember that was coming out of a COVID period. But from there, mid-April 23, around there, it does look like a slight incline. Not much, but there is. So average hourly earnings month on month also seems to be slowing down a little bit. So overall, the labor data seems to be either stabilizing or turning the corner to go weaker. That would be very concerning for the Federal Reserve because they don't want to see weak labor data. They want to see strong labor data. So if they're also of the opinion that it's turning a little weaker, that could strengthen their hand in terms of what they do with interest rates next week. But I don't think that we're in for another 50 basis point move. At most, we're in for a 25 basis point move.
Andre, yes, and then lastly, we've spoken about a lot of data, but there's a lot of stuff still happening that we haven't spoken about, and that's probably the US election that also happens next week. We're going to make a little bit of a video for everybody that we'll distribute on Friday, what we expect from the US election. But for now, taking all of this into account, US election, labor data, Bank of Japan, it can cause a lot of volatility, our local medium-term budget speech, the rand sort of poised to either move weaker or stronger like it always does. But it's sort of our band where we're sitting in 17, 18, sort of almost at the midpoint. What can we expect from the local currency?
Okay, so I've spoken about the medium-term budget that could possibly come out slightly positive towards the currency. On the other hand, the upward tick that we've seen last week was linked to a stronger dollar. That stronger dollar was linked to election polls coming out pointing to the possibility of a Trump win. That possibility concerned people in terms of what could happen with foreign policy and what could happen specifically in terms of trade relations. And that concerned emerging markets a little bit, and we've seen an uptick in the rand. A very resilient rand, especially if one looks at cross rates that actually strengthened over that period. That tells us that local factors is still feeding in positively towards the rand. For the moment, for the next week, I don't think that we're making any big changes. I think we remain within this very narrow band that we're trading, and we'll discuss that further towards the end of the week when we speak about the elections.
Andre, I say thank you for that. We enjoy the week that lies ahead. Cheers, everybody.
Thank you very much.